Stop staring at your phone and what other people are eating on social media and pay attention. What's up guys, this is Chris, and if you want to learn how to create wealth without all the hype and glamour, stick around and let's talk real estate. Roll the intro. I don't have an intro, I just always thought it's cool to say. So we talked already about the 4 main ways that you can make money in real estate, and if you haven't watched that video, it's going to be somewhere on the screen right here. I think it's that side. I'll also include it to the link down below, so check the video out. It's called the 4 main ways to make money in real estate. We also talked about wholesaling and how to wholesale. This video you can also watch on the card up above, and I'm going to include it into the link down below. When you finish watching this video, you can watch that if you haven't watched it. Today we're going to talk about buy and hold. This is what I mainly do in real estate. I also do private loans, as well as I've done one flip, but those are not my bread and butter. Okay, so who am I and what do I do? By the way, if you already know who I am or just don't care, you can skip that part. So I'm a 34-year-old hustler and grinder. I got my green card in late 2016. 2 years ago, I discovered I'm pretty lazy and I don't want to work for a living. So I started looking into different avenues of passive income streams, and I discovered real estate. Since 2018, I have acquired 3 rental properties. I even rent the unit I live in, which is my primary residence. I also, as you know, I have other businesses. There are 10 actually, I counted them the other day. And I do other stuff, but my majority of net worth is in real estate. I control properties that total up to about $500,000 so far. All that while I have a full-time W-2 job, and actually 2018 I had 2 W-2 jobs. My plan is to retire by the age of 35. Honestly, if I don't retire exactly 35, if I retire 35 and a half or 36, I don't think I'll be disappointed. My goal with this channel is to educate people on finances and show them that even an immigrant who came here and didn't know anybody can still, have a dream that they can achieve and retire early, or what have you. Maybe that's not your plan. Maybe your goal is different. But my goal is I just want to travel, and I want to have different streams of passive income and not to work for an employer. I want to build my dream, not somebody else's. For all that info, all I ask in return is to smash the like button, consider subscribing, and leave a comment. And please, I know there's an angry comment coming in every now and then. Please at least make it funny, guys. So for this video, I tried to find a definition online on what is buy and hold, but in my words, I'm going to explain it very simple. The strategy of this buy and hold is to buy the property and hold it long term. Now, I saw online it says like buy the property long term and sell it down the line. I don't necessarily agree with that. Maybe you're not planning on selling it. What does down the line mean exactly? I'm planning to sell my properties in approximately 26 years. Some people have a shorter plan, maybe 5-year plan, maybe 10. Mine are 26 years because, as we're going to touch later on, there are good tax implications that you can save on taxes or defer the taxes, and then you can do a 1031 exchange and do a step-up tax basis, so you never pay taxes to the government for that property, which you are incentivized to do by the government. It is not a loophole. This is how the government incentivizes investors to invest in real estate. Otherwise, I wouldn't do it. So all in all, you purchase a property like this one that I live here. It is a 3-bedroom, 2-bathroom. Obviously trying to get a good deal, and you hold it long term. Now on a primary property, you do not have any more good incentives. You cannot write off the interest that you pay on the property. You cannot write off the closing cost. But let's talk investment properties. On the investment property, you are writing off the closing cost. This is a business expense. You're gonna write off also every time you pay the mortgage, you will write off the interest on that mortgage. That's going to decrease your personal tax. In case you do what I do, my properties are under my name, not under LLC. If they're under an LLC, that's a different story. So all in all, this is buy and hold. What is this? So all in all, in simple words, this is buy and hold. Now, let's see what metrics we need to look at to know if this is a good property to buy. We already, when we discussed wholesaling, discovered how to comp a property, how to get a CMA, which is comparative market analysis. So I'll give you an example with my last property I bought. It was listed for 125, I think. Okay, I'm looking at it right now. It was listed for 115. I got it for 112, although on record is 115 what I got it for, but I got a credit for $3,000. It was listed for 115, but comps in this area that I got the property in were kind of weird. And even that's the first time I used a realtor. And when you're a buyer, if you're not very knowledgeable about this, use a realtor. You don't pay them anything. But that was the first time that I used a realtor. The other two properties I bought from owner, no realtor involved on either side. So at the time of the recording, there are not very similar comps. So the comps that I got were like, average was 140, 150,000, and the property was 115. And that was like in late March. I think it was like 20 some of March, right 1 week before COVID hit and everything shut down. That's 2019. Actually, not last year, 2019. And the realtor, I remember, he said, man, I think they undervalued this property. So I kind of figured out that it's undervalued. And now when I see the comps right now, there's nothing like the cheapest property that sold, 3-1 is that one, is 140. I can even show you, maybe 140 is the cheapest one, and everything else is 170, 125, and so on and so forth. So it's easy to say for me that this property is worth easily 150,000, let's say 155, and about 115, so it increased in value with 50K. But how did I buy it so good? Now, basically what I'm looking at is cap rate, which is not very valid for residential. Cap rate is usually used more in commercial properties, but I'm looking at my cash on cash return, and I want to have 1% of rent, which means whatever I buy the property for, I want the rent to be at least 1% or as close to 1% as possible. The property is $100,000. I want to make $1,000 in rent. Now we got three different categories of properties: low end, middle, and high end. Low end, ghetto. In Jacksonville market, ghetto is 30 to 50K, maybe 60. Now on those properties, they're cheap. You're gonna make a lot of rent, but appreciation is almost none. Okay. Now let's go to the high end properties, $500,000 and up. $500,000, expensive. Oh, I'm sorry. About the rent, you're gonna make a lot of rent, which means for $50,000 property, you're gonna make $800 in rent, which is a lot. $500,000 property, say you're gonna make 3,000 in rent, which is close to 0.6% or so. Middle of the road, which my properties are, 100 to 300 or so, 400 or so, you're gonna make around 1%. For example, this property I bought for 115. The rent is $1,035. And I did not increase it this year because, of COVID, I want to keep my tenants. I can easily rent that property for $1,200. So it's going to be a little bit more than 1% rent. So how do you calculate cash on cash return and what I'm looking for? I like my deals to have at least 12% cash on cash. Cap rate is usually around 8. It's always been around 8. It will be around 8, maybe 7.5, maybe 8.5. But when someone tells me, oh, the cap rate is 8%, bro, it's residential. Cap rate is more for commercial. So cash on cash is calculated when you get the annual before tax cash flow divided by the total cash invested into the deal. For example, let's take my property, for example, and do some annual before tax cash flow. Means rent, 1035 minus payment, 750 is what I'm currently paying. Actually, it's 730 times 12. That's $3,660. My cash flow before taxes, and I divided by the total investment. Now I put down 18,000 for this property, so I'm going to divide it by 18,000. I'm going to multiply it by 100 and I'm getting 20%. But because I put only 18%, I put only 15% down, which is $18,000. So I don't know if I said that I put 18%. So because it was only $18,000 or 15%, now I'm making cash on cash 20% cash on cash return, which is great. But say I put 20%, which is 22,004. This is still 16%, 16.3, which is a great cash on cash. It's just can't beat it. I mean, everything over 12 nowadays, especially in today's 2021 market, it's insane. So I took the property. Tenants had a lease for another 6 months. No problem with them. They keep the property clean. You gotta see when you're looking at a buy and hold, Not a bad idea if it comes with tenants for you to see who the tenants are. You generally want to basically vet your own tenants, not inherit some tenants, because everybody says, oh, they're never late on payments. Guess what? On my second property, the tenant has been late for the last 12 months. He's been late 6. Actually, I'm lying. It's not been 6. It was four times, and he pays me late fee every time. Unfortunately, I don't want to take the money, but fortunately, that's how it is. Okay, there's a very good app. It's called Deal Check, and it's free. You can download it on your phone. And I have here that property, and I'm going to give you some of the metrics here of the property analysis. Alright guys, I'm just editing the video here, and I noticed it's like 25 minutes long, and I'm trying to do 10-minute videos, 10 minutes a day, keeps the doctor away. So I'm gonna have to chunk that in 2 parts. We saw a little bit of what is cash on cash and cap rate. In the next video, or the continuation of this video, we are going to talk about more about the numbers of that particular property, the last one that I bought, and I'm going to show you, how to calculate the cost to obtaining the property, potential repairs, the cash on cash, what is the cash on cash on that property that I bought, the cap rate, and so on and so forth, and how to evaluate the 1% rule for the rent. I mean, actually, it's pretty standard, rent divided by purchase price. But if you like that type of content, please help me grow the channel and show your appreciation with support. I mean, with a like and a subscribe. Show your support with a like and a subscribe. Anyways, keep hustling guys, and I'll see you next week on Friday for the real estate videos. In the meantime, keep up with my motivational Mondays and with my hustle Wednesdays. See ya.